Good morning, everybody. It is Tuesday, February 2nd, and this is the option selling call. Made a change to the name because the other name was just too hard to say. So the option selling call, and we're going to talk about all the stocks that we would like to own and how to get into them. If you're fundamental trends, you find this week's dividend stocks for a correction and growth stocks for a correction right on the front page. Or you can go up here and scroll to your membership. Dividend Collector has the dividend stocks, Sustainable Growth has the growth stocks. And of course, if you're a rare member, you can see everything up there. Same deal at margin of safety. The services are essentially the same, except that Fundamental Trends has the microcap stocks and margin of safety has a better chat room. So growth stocks for a correction. What do we want to do with some of these? Well, most of these are relatively close to our buy zones. That's why I picked them. So if you take a look at MP Materials, we can pull up an option chain, your broker of choice. I don't really care which one you use, but I'm going to pull up Schwab, and I'm going to enter the symbol for MP Materials and do it again. Yeah, I like Schwab, but I don't think it's quite as easy as you'd like it to be. So I want to take a look at just the monthly puts on MP Materials. And I see that the $25 March is getting around $2. That's pretty good for 7 weeks. 7 or 8% return. Figure that's about 6 periods per year. So that's a pretty huge return if you collect $2 against holding $25 in cash to be able to buy the stock. This is one that I think that you may really want to do, given that at 25 bucks, that puts it right into the buy zone that we're looking at. And then you get a couple dollars. So you'd have a net cost of around 23. If it doesn't drop down here by March and get put to you, so what? You just made an annualized return of like 56%, about 48%, give or take, right? 2 divided by 25, 8%. Let's say there's 6 periods in the year. It's a little bit more than that, but that's okay. Right, that's a huge annualized return. So this is probably a trade I'll be making today or tomorrow. I mean, I'd like to do it on a down day, and I know that most of the stuff should be up today based on how the market started. So yeah, the market's way up today. MP Materials is up a few percent. So maybe tomorrow we get a little bit of a pullback. Oh, looks like everything's up. All right, so this is one that I want you to focus on. You're either going to get a fat premium or you're going to end up owning shares in a company that's going to be a monopoly in a very important industry. Sun Power, not there yet. Komatsu, I believe we looked at this last week, and there really isn't an option market. Right, no option market on Komatsu. Facebook, awfully expensive. But Ford looks like an interesting one that you can sell puts on. I'll probably do some of this today. So we go out to the March monthlies, 58 cents on the $10. So you're making 5% for 7 weeks holding. Again, it's multiplied by about 6. It's about 30% annualized return. Nothing to sneeze at. But if you want to sell a little bit more frequently, maybe take a look at the February's, take a smaller premium, or just bump up the price by 50 cents. And then when these expire in a few weeks, if they expire, you might end up getting the stock. But if they expire, then go ahead and write these. So I know some people who like to write the weeklies like every other week. And I think that's a pretty good strategy if the stock you're doing it on is in its buy zone, right? So Ford is kind of at the top of where I really want to buy it. I really would like a net cost, down here, 10-ish. I mean, ideally, get shares under 8 again. I'm not sure if that'll happen. There's a lot of interest brewing in Ford. You saw the announcement this week that they have Google now on their side. And I just really want you to think that through. Is Google's AI is the best one out there. You still use Google Maps in your car, right? Who's really using Apple Maps? Nobody's using Apple Maps. Everybody's using Google. So even if you want to bring your iPhone into the car and play your Apple Music over the Bluetooth, yeah, you can still do that. Nothing going to stop you. But the car is going to be built on Google Vision, Google AI, Google Maps, and they're going to hook a lot of people into that whole Android environment. And I'll tell you, as much as I like my brand new iPhone 12, it'll be hard for me to switch. I'm not saying never. Not saying never. EPR properties. I think that this one's pretty interesting. Let's see if that one has the put that I think it has, right? A really good rebound play. Basically at the top end of our broader buy zone, but we'd like to get it down towards 30. So if we sell the March 30, we're going to get a little under a buck. What if we sold 35? Get a net cost about $32.50. It's not too bad for your first entry into the stock. So I think that selling the March 19th, $32.50 is pretty interesting. 35. And if it gets put to you, then maybe you buy more shares if it gets down under 30. But I think that this is a pretty good one to sell. You're getting about 8% again, times 6. It's awfully tough to make 40 some odd percent annualized returns. I think you should probably do it when it's on a company that you really would like to own. Spectrum Brands, SPV. I'm not positive they have much of a bond market or option market. See, this is the clunky part of Schwab that I'm not real excited about. I don't know why you can't just press the button and have it work. So I think that Spectrum is basically, just getting out of our buy zone. So I think it's pretty easy to sell maybe a $75 put, right? You're gonna get about $4. Not much of a market, right? There's almost no open interest anywhere. So you're gonna have to use limit orders, and you're gonna have to be real dainty with your trades. So if you got $1 million accounts, be careful. You're only gonna be able to do a few of these at a time. So control your orders. Don't go ordering 30 of these at a time because you're more than the open interest. But I do think that this is one that we can hit. It's very important that if you sell a put on this, that you don't screw up everybody else by establishing a low sale price by not putting in the appropriate ask. So ask for 440 or 450. Don't take a market order and don't put in 330 and screw everybody out of $100 per option. Always put in your request, your order, to try to get the ask or a little bit more. And then you can work it down. Delta Airlines, right? This is another one that you look at and you go, well, it's a little higher than I want, but maybe they have big fat premiums in the low 30s. I bet they do. So if we take a look at Delta, a monthly, say we'd like to get it in the low 30s. If we sold a 34, we'd get $1. Maybe. It's only an annualized return of, under 20%. Not positive that I would do that. I think I would probably wait for this to come down closer to the orange box, get down to here, right in there, and then you can start selling puts. So I'd hold off on Delta Airlines right now. Take a look at the dividend stocks. Lockheed Martin, awfully expensive to sell puts on. Analog Devices, maybe. Only going to hold $10,000 aside to do that. Again, I'm just pulling up March. And you can take a look at some of these shorter term ones. If you want to be a little bit more active, go ahead and be a little bit more active. I'd start with the monthly for February. I don't think any of these are going to end up being close enough. So let's widen what we're looking at. All right, let's get down here to March. So you can maybe sell a March for $1. But again, I don't think it's worth doing because it's just not close enough to its buy zone. You need it to come down here to about 130. And then you can sell your puts into here. So hold off on analog. Newmont Mining is getting close, right? Today might be a good day. So let's take a look at Newmont Mining. Again, you can look a little nearer term. Not getting much. The 50s, the 55s. I think you need to let it come back to you. We need to see Newmont in the middle 50s for that to be an attractive put to sell. Same thing with Nutrien. Lumen Technologies, I think I think fire off on Lumen Technologies. I'll tell you what, I guarantee you we're gonna get good puts on this one. So Lumen, sell the 11s for 50 plus cents, 65 cents. Ask for 65 and then whittle it down, every 5 minutes or 10 minutes until you get some action. You can do the March. I like the outlook for this company. I'm telling you, they're going to have a strategic transaction eventually. So 10s for March or February, or do February and then do March, when those expire. Cisco Systems, I think, is that still just a bit high, isn't it? No, maybe. Somebody asked, do I use bar charts? Yeah, I do. I use bar charts all the time, but I just did these 2 articles with all these charts, and these are the focus stocks that we really want to try to get into. So that's what we're looking at today. So we'd like to get a net price around 40. So if you set your order here in March, sell the 41 maybe. Not getting much here. You're only getting a point. Annualized returns only going to be around, not much. You're barely double digits. So I'd hold off on Cisco, American Tower, Vici, Crown Castle. I don't think that these are going to have much for us. We'll see. Oops, I didn't put in their buy zone. Look when I get down to around 210, 220. Yeah, just not much there. Yeah, just got to wait for these. Need to see these come down a bit more. Right here probably would have been a spot to do it, right? Take a look. Take a look at that price. See how these all bottomed out. So we're looking for these to get close to their oversold mark. Vici is not going to be ready yet. Store Capital. I doubt that there's enough volatility in this to give us much of a premium. But let's see if we can get a net cost under 30. That's make us feel good about it. Not much balance there. So maybe you get 3%. Yeah. If you really, really want to have a placeholder in your portfolio for store, I think you can go and sell the March 30. Ask for 90 cents. I'd probably ask for $1. Maybe you'll get it. Put it on a good till cancel order. A little bit of volatility. You know what's going to come. And that's one of the things. That's why you ask for a little bit more than the ask. Sometimes a lot more than the ask, and you just set it as a good till cancel order. And you let it come to you with the volatility over the next several days. Take a look what the market did last week. It was down 4%. Stag and Erstad Biddle. So Stag, I think, is one that we may be looking at right now. Not a lot of open interest. Again, that's why you have to control your orders. So the 30, how do I feel about that? It's very top end of what we'd be looking for. I mean, you could sell the March 30. I'd probably set the order at $1 and try to get it on some volatility. I may set it at $2 and try to get it on some volatility. Probably $2. I'll put that in the article. And then UBA. What do you think, UBA? UBA says, we got no premium for you. I guess you could ask for $1 or $1.50. It's not what it's going to go through today. But it's close. That's maybe. Oh, I don't know what we get for that. 14. So you only let you ask for a 15 or 12.50. If you can get, I'd say over 70 or 80 cents for this one, I think that's pretty good target. 70, 80 cents. I'm gonna try to make that trade. I think if I get a net cost under 12 on UBA, that's pretty good. So I guess I'd be happy to sell 12.50, get a net cost under 12. Yeah, I like that. I'm going to try to make that trade. Put up your covered call questions real quick. We'll take a look at any covered calls. Somebody says they sold the Barrick Gold $22 puts for February. Yeah, I mean, I've been saying you can just go ahead and buy Barrick Gold right now if you want. But yeah, you sell the 22s, you get your 62 cents, net cost 21.40-ish. Right, that's pretty damn good entry. I think you could, if you just want to keep generating premium on things that you like, you could sell some of these. I'm going to sell 2 or 3 puts this week. I'll have those in the article. I'll rank order them again. Gold, like I said, if your overall gold stock position isn't over 16% right now, then I think you can just keep on selling puts on these. Some of these real estates, I think you sell puts on. Everybody's hopeful that we're going to get some bipartisan agreement on stimulus. I don't think it's going to happen. I think what's going to happen is we're going to end up doing reconciliation. We're not going to do the appropriate tax things to do anything about the people who just made a statement through Reddit and GameStop and Silver. I think we're going to keep making the same mistakes that we've been making because I think that, oh, look, a squirrel. I think that's what's going on right now. You all know that movie, right? Squirrel. Yeah. Misdirection. They need to fix the whole trickle down thing. And if they don't, we're just going to keep having the boom bust cycles and more money goes uphill. So as we try to figure out what's going to inflate the most, because it's not a lot of, not a lot of in between stuff. It's either your necessities of life or your assets, and everything in the middle stays pretty much fixed price. So your necessities are going up. Corn is real high right now. And then you take a look at certain asset prices. So where does the inflation from the Fed go? And it goes to necessities and stock market assets and some real estate and some commodities. Then everything else, right? Everything that's not on the barbell ends, just is almost deflationary. And we don't want to own that. So any cover call questions? I will put together how I use bar chart in an article. It's too much to cover right here. But I have been using the screener at TradingView a lot more, right? So I have it set up for a weekly time interval. Then I have my 14 period RSI. And you just go through here and you can see there's not a whole lot, right? Not a whole lot that's oversold. And all your Fannie Mae's. Then you jump into the 40s really quick. I mean, a half page. Then scroll through these. You have a basket that we can look at, but we're in the 50s really quick. I mean, that's only a couple hundred companies. So there's not a lot out there worth doing much with. But if you use this TradingView screener, I think that this is the easiest one to find ideas. It doesn't let you put in your own watch list. They said that they're coming with that at some point, but you go here and you just start looking at the groupings. Gold, right? Here's Lockheed Martin. Lockheed Martin is really, really interesting. It's on a sell signal. So if you keep track of that from week to week, when this changes, right? As soon as this changes, you need to jump in because it'll be oversold. It'll be in some sort of a stabilization pattern. You're going to want that. And you just notice all the gold miners. Here's Barrick, right? And again, when it's on sell, you don't want to pile in, but it usually means, if you know something about the company, you can make some assumptions about its value. So Lockheed Martin is getting to the point where it's undervalued. Barrick Gold is undervalued. You just keep going through. And, I don't like Dominion Energy. I think this is one that's cheap for a reason. And stop resetting on me. Where'd it go? Yeah. So Spectrum, by the way, is a lot like Church and Dwight. So it'd be interesting to see Spectrum in here somewhere. Another gold. Wisconsin Energy. This is one of the utilities that, we can say, well, what about Wisconsin Energy? See, I've got a chart on this one. That's interesting, right? That's, if you really want a utility, 1% junk. You just got to catch it on a spike down. If it gets down into the 70s, I think you just can look at Wisconsin Energy. We Energies used to be Wisconsin Energy. But yeah, this TradingView screener is a little bit more work, but it's a lot more information. And if you got, take your time and go through it, this allows you to do the weekly charting right here. Bam, just change that to weekly. And you can even change this to 20 if you want to, right? Make that 20 RSI. That's what you want to do. That'll give you even more accuracy. The longer the period, the more the accuracy. And of course, most of the shorter term cycles run 3 to 6 months. So this represents about a quarter. That's why I'm just sticking with that one. I mean, I guess I could change it to 13. Or I could experiment. 13 plus 26 is 39 divided by 2. I could, make it a 20. I think 20 makes some sense too. Liberty Latin America. Take a look at these. AstraZeneca. Here's a preferred from Stag. This is another thing. I like that they have the preferreds in here. Tell you what, if you're not using TradingView, it's the more I use it, the more I like it. And I will say I'm using Stockbroker less. And bar chart I bought strictly for the screening. So somebody asked about bar chart. I said I'm not going to really go through it with you, but I mean this is just the easiest way that I found, and their formula is pretty good. So you can go and do that. I'll show you how I set these up in the future. All right, no covered calls. Am I selling calls on SPACs? No. The whole point of buying a SPAC is for the explosive upside. So you don't want to cap your explosive upside. And I don't even know that there's option markets on many of those yet. All right, let's call it a day, and I will get a nice option article written, and someday I'll get Macro Monday from last week finished. And then I have another one that started too, so I've got two pretty good articles that I just have to finish up. All right, everybody, have a good day, and I will see you later on. Teresa, I have a question for you later on, but yeah, let's make sure we connect. All right, take care.